It's showtime.
Hello everybody and welcome back to the channel, and today's video that is going to show the CMD investment portfolio in Etoro. So this is basically the portfolio that we have linked to the channel, and therefore the most important criteria is to invest in stocks that we have analyzed either individually or as part of our top sector stocks. There are a few exceptions, we would admit that, but the plan is to phase them out as we move along. So we have put some money into this portfolio, and the purpose is obviously to select stock that we have analyzed and we think are good investment. And it's also for you to track how our performance relative to the videos that we are analyzing. Are we selecting the right ones? Are we selecting the wrong ones? Obviously, we can never be 100% guaranteed to hit a perfect stock every single time. We have a few bad apples out there, but we also have a lot of good ones in our opinion. We may not have hit the best one of them, like Fuel Cell, which obviously has grown 500%. But basically, it's very important for us to stay true to the way we analyze stocks and how we see them. And we are not going to invest in a stock where we are not seeing the value in the stock. And we are therefore not always hitting the right ones. We are not necessarily hitting the home runs, but as you will see today, hopefully we have hit quite many good stocks overall, and we are quite satisfied with the development so far. The purpose is obviously once in a while to take a look at the portfolio and see how we are doing. You will see some of the trades that we are doing. We are not swing traders. We do not trade every single day. We buy and sell once in a while once we feel that either a stock has gone up too much or where we start to get concerned that they're not performing as they should. So it's not going to be as dynamic as you will see trades every single day on this one. At least that's not the purpose initially, but it is to invest in stocks as we move along and sell the ones off that has performed well or not well. We're going to see as we move along how this progresses, but this is at least how we're envisioning as of today. So first we're going to focus on the current portfolio of stocks that we have, and after that we're going to show which one we have bought and sold until today. So the first one that you will see out here, Amazon, obviously doesn't require a big explanation. Amazon is a super strong, solid company. They're eating their competitors for breakfast, and obviously we think Amazon is a solid long-term stock. What we really like about Amazon is that they continuously are developing into new areas, new services. They're never standing still, and therefore we still think that that will be a great value pick for the long run. Then we have Alibaba, and as you can see, until today we are up 12.76%. We invested in Alibaba straight after the video we put out on the e-commerce, simply because we believe that Alibaba had been hit too hard based on the negative stories in China that was going on related to the IPO of Ant Group, which Jack Ma is also owning. So we thought it's going to be a good entrance, and until today they have obviously already returned 12.76%, so we are quite satisfied with that one. We then have AT&T, which is one of the safe picks in our opinion, a really stable company with a stable business, but they're not afraid of doing acquisitions within the media world and expanding. They have gained us 5.82% as of today, and we believe that besides the attractive dividend yield that it's paying, that there's definitely at least 20 to 30% more in this stock. So this is definitely one we're going to keep long term. Similar with Microsoft, which is the next one that has only gained us 0.48%, so nothing really spectacular. Obviously, some of the tech stock have been under pressure in the US, but we believe that Microsoft is a safe pick for the long term. They have definitely already shown that they have resilience in poor times, and they manage to innovate themselves for the future. So that's why we're definitely going to keep Microsoft for the long term. The next one we have is Intel, which was perhaps a little bit of controversial pick because we were benchmarking up against AMD and Nvidia, which we really like as well from a product perspective. But our thought was at the time that Intel had simply been hammered down too much, and we therefore saw them as an interesting long-term buy again. And shortly after we actually bought into Intel, it dropped with I think around 15% because they had delayed in production of the new chips. So that was obviously a tough one, but we said, let's just hold because we believe that this is going to pop up again at a certain point. And as of today, we are up with 8.52%. Intel is also paying a good dividend. So again, a relatively good stock. It may not be the one who is going to yield you 100% in the future, but we have faith in that Intel can re-innovate its business and can start competing more heavily with both AMD and also Nvidia on providing the best chips on the market, which they have been struggling a little bit with lately, but we're definitely going to keep them. Then we have eBay, another stock that we bought just after we had launched the video where we ran over them. Again, basically we think that eBay was a safe, solid pick with a good opportunity to give a good return in the near term at least, and it has gained us so far 12.99%, so we are quite satisfied with that, and we're definitely going to keep on with having eBay in the portfolio for quite some time, simply because we believe that this whole corona situation has definitely made a shift in the market in terms of how people buy products, and companies like both Alibaba, Amazon, JD.com, eBay are definitely going to benefit from that. So therefore, again, it's a consumer trend that is changing, and we are therefore going to keep them for a significant period of time, we believe. Then we have the next one, which is Bank of America, which was also one of the first stocks that we did in the bank sector. And in this video, we actually found quite a few good opportunities, but we felt that Bank of America provided the best possible return versus the risk inherited. And so far we have gained 37.28%. So it has been a really good pick for us, and we're really satisfied with that. We are going to keep on having them in the portfolio, but we would say it's not much more that it needs to increase before we will consider to sell this one, because it is starting to move up in what we would consider a overvalued territory, and therefore this may be one that we are considering to send out of the portfolio. Please let us know in the comment section if you agree with us or whether you believe that we should keep back for a longer period of time. Then we have Merck, which is obviously a pharmaceutical company. We covered them together with 4 others, and as you will see, we have some of the others also in our portfolio. Merck was definitely not our top pick in the video, but our thinking at the time was obviously that we used to have some stocks in our portfolio, but also that with the whole Rona situation and with vaccines coming out, this would benefit the sector and also Merck, of course. So therefore we said, okay, we're going to enter into a position. So far it has not really yielded much, 0.90%. So this may also be one that we are considering to take out of the portfolio and try to put the money elsewhere where we see a bit better value. So not too much focus on that more than this. Then the next one we have is Visa, and that is definitely one of our most disappointing picks. We were selecting between Visa and PayPal at the time, and then we went with Visa because we felt that PayPal was closer to a fair value and we saw a bit more upside in Visa, so therefore we decided to go with them. That has illustrated to be the wrong pick. We should definitely have taken PayPal instead. So we're a little bit disappointed with that, but we are also still a little bit surprised that it haven't returned more than 0.91%, simply from the fact that consumer trends are changing. People are going more cashless. People are buying a lot more online during this whole pandemic, and we thought that that was going to benefit Visa. So far it hasn't returned us enough. I think we're going to keep it a bit longer just to see how it's going to evaluate over the coming months, but we are a little bit disappointed with this pick. However, the worst one we have is Lockheed Martin, which we did in the aerospace and defense. And here we thought that they were the better pick from a value perspective. That has definitely not been the case. They are the worst pick that we have had with minus 10.58%. So again, a little bit disappointing, but we also need to be realistic. We cannot pick the right stocks all the time. Again, we have kept Lockheed Martin in the portfolio just to illustrate that not all the picks are necessarily good, but we are also considering to get rid of this one and move the money over to something where we believe there's a bit better value, because the stock is not really going anywhere and it looks to be kind of like in a bit of a dead water. So disappointing pick, but that's also part of investing. No one is hitting right all the time, and that's just the way it is. The next one we have is the French super major Total, which we invested in shortly after having done the analysis that we did, which was our first video on our real video on the super majors. We felt that Total was the best pick overall among the bunch. Simply from the fact that they're a very solid, well-run company, but they're also heavily focusing on renewables. And as you have seen, we have done other videos illustrating where the European majors, and Total obviously is one of them, how they are slowly transitioning into renewables. So in our opinion, Total is definitely not just a greenwashing kind of company. They're meaning this seriously. Of course, they're not going to abandon the oil and gas business, but with the acquisitions and the movements they're doing into renewables, they definitely want to transition into become one of the biggest renewable companies in the world. And as we said in our video recently, we do not think that the renewable part is being appreciated in the oil and gas majors by the market. But still, Total, we believed, was a very good investment because we had the expectation that the oil price was going to go up, and that was naturally going to have a positive impact on Total. It has gained us 30.5%. So again, we are super happy with that pick, and we're definitely going to keep having them in portfolio because we believe there's more value to be gained, definitely around 25% in the long term, and they're also paying an extremely attractive dividend yield. The next one is Eli Lilly, which we also did as part of our pharmaceutical company, and they were our top pick, and they have definitely also delivered the goods. 35.77% have they returned, so we're very satisfied with that. We are starting to consider to perhaps put Eli Lilly out because it has simply gone up so much at a relatively short period of time, and it may be a good time to take some profits on them. But we're going to look at the numbers again, and we are going to take a decision later on, but definitely have been a good pick. Another one was Bristol Myers Squibb, which was our second recommendation in the video. It has gained us 10.72%, so we're also quite satisfied with that. And it was based on the same rationale as Eli Lilly and also Merck, that we believe that the pharmaceutical industry was going to benefit from this whole pandemic situation. The next one we have is Canadian Solar, and this one we also bought directly after our Solar Part 2 video. As we said, we believe that it was completely undervalued company, and since then Canadian Solar has returned us 38.9%, so we're also really satisfied with that, and we definitely think there's more value to be gained with them, so we're definitely going to keep them because they by no means seems to be crazy overvalued like some of the other renewable stocks that we have covered. Then we have Palantir, and that's one of the stocks that we haven't covered in any video as of today, but which we decided to buy after seeing some other YouTube videos where we think there was done some really great analysis by some content creators, and we definitely felt that based on that this would be a good investment. So we said, let's add a small position of them to the portfolio just to see, and that has gained us so far 7.02%, and we're definitely going to keep that in the long run because we believe that their technology is quite unique and they're going to take good advantage of that in the future. Then we have Spirit Airlines, which we covered in one of our recent airlines video. It has gained us 3.57%, not a lot, but we definitely believe that there's a lot more value to be captured in Spirit Airlines when the world returns to a bit more of a normal state. We'll definitely still say that them and Southwest Airlines, from the ones that we have covered so far, we are going to do a part 2 video in the near future, but they were some of the most interesting ones, and that was why in the end we decided that we believe that there was a bit more upside in Spirit Airlines than Southwest Airlines compared to the share price at the time, although Southwest is a really well-run company. So Spirit Airlines is definitely here to stay for the long period of time. Now we're going to illustrate some of the shares that we have both bought and sold since we started the portfolio. One of them was TUI, which is a travel company where we thought, okay, they had been beating down significantly and there was a lot of good value to be captured on them. So we said we're going to jump the ship. We did that. It went up with actually 70% at one point, but then they had to go out and get more capital and the share prices didn't drop, so we decided to pull out and we gained 24.63%, so it could have been better, but we were still quite satisfied. Then we also have, as you can see here, ENPH Energy, which we gained 20.30% of. And as we said, we are very excited about ENPH. We think they have some unique products. We entered into this position similar to Canadian Solar just after our video, and we closed our positions too early, but we just felt at the time that, as we also mentioned in our video regarding them, the individual one we did, was that they were starting to look quite expensive. So we thought, now we're going to close it and we're going to see if there's going to come a pullback, and then we're going to jump in. That didn't happen, and we are considering now whether we should move in again or not. So far we have decided to stay on the sideline because we still believe that it is a little bit overvalued. But that may prove to be the wrong decision, but that's how we feel, and that's why we're going to stick to that. But ENPH is a solid company, and that was also why we bought them and why perhaps we should have stayed with them. Finally, the last one that we have is Dollar Tree, which we bought after our video regarding the retailers. We also saw a quite decent value in them, not a lot, but just for the short period of time while this whole pandemic situation is going on. So we bought into them, and after they have delivered quite good quarterly report, we decided it's time now. It is fairly valued. There's not much more to be captured in the stock. So therefore we sold it, and we gained 12.75%. So again, it was on a short period, so we were relatively satisfied with that. So now that we have looked at all the different stocks and we have given you the reason for each one of them, we thought it would be good to look at the overall performance of the portfolio. And basically what this performance overview shows is the net change in equity from month to month. So if we look at January 2021, which is obviously the current month, we are so far with 3.91%. So a pretty decent start to the year so far that we hope can continue throughout the year. If we go down, we can also check how we did in 2020, and we started in late September 2020. It gained a 0.55%, so nothing special, but we also started late in September. Then in October, we had a rough month, similar to a lot of other people. It was down 5.91%. We had a huge rebound in November as part of the presidential election in the US, had a big influence of this, of course. We gained 11.80%, and finally in December we gained 4.57%. So a total return on 2020 for the period on 10.59, which in general, in normal circumstances, will be better than the average market. So we are quite satisfied with that. Obviously, this does not mean that we are providing the highest returns in the market. As we said earlier in the video, we are having a criteria, which means we will only invest in companies that we are evaluating on the channel, besides the few cases that we have run over. So that's the primary purpose. There may be better picks out there. There may be some that we would actually really like to add to the portfolio. But again, the criteria is that we will have to have evaluated the company. So please keep that in mind. We do hope you enjoyed this video. We hope you enjoyed seeing this portfolio. Maybe we will try to do some different things where you can vote on which stocks we should add to the portfolio. We are thinking on different ideas. So please provide some input in the comment section if that could be interesting or funny to do. Please also give us a like because it really helps with the algorithm, and please subscribe for future content. There's definitely coming out some more interesting videos this week. We definitely have Fuel Cell, which is going to have the quarterly report. We have an interesting Norwegian hydrogen stock that we got recommended the other day on one of our other videos, so we're going to check that one out. Besides that, there's not much more to say than have a nice day, stay safe, hasta la vista baby.